Hey there, welcome back to the channel. I hope you're doing fine. I know this video has been pending for a long time, but due to some server issues, I could not get this any quicker. But now in this video, we are going to understand about the unknown side of document splitting. We all know that document splitting is used in order to have management reporting at every characteristic level. But there are other functionalities of document splitting which we rather ignore, but something that constantly keeps working in the background. So we'll explore the configurations a bit more by taking some examples, understand what are those aspects of document splitting which we often do not give much significance to. So before we jump into the video, you all know that you can contribute to our work by just subscribing, hitting the like button, and sharing the video. And if you are generous, then please do contribute to our work by becoming a super member or a premium member of the channel. In return, you will get a lot of discount coupons and many other free premium member only videos on the channel. If you want to do a one time contribution, you can hit the super thanks button below this video, and that would really help us to cover our expenses. So let's jump into the video. So before I begin, if you haven't yet watched any of the previous videos in this document splitting series of videos on this channel, please do watch it. You'll have the link on the top right corner. Just click that, watch all the previous videos so that you will get a meaningful explanation of this video. So before we see that second aspect of document splitting, let us once recap on the basic configurations required for document splitting. The first one is to classify the document types, and the second one is the assignment of GL accounts to the item categories. And then we have a splitting rule, and then we have line item splitting where we are selecting what are the characteristics or the different cost objects at which we want the document splitting to work, and we can also enable whether we want a zero balancing or not. And we also saw all these configurations in the previous videos. If you haven't, as I said, please visit that video, and then you'll have a better understanding on what we are discussing in this one. So we'll put this here, and now we'll jump into the SAP system and we'll try to post something and see what happens. So now I am in the FB50 transaction, and before I go ahead and post something and show you, let us first try to understand that when we are posting any FI document, be it an manual entry or an automated entry, what kind of a restrictions can we or what kind of a controls can we have from the configuration point of view when we post a document. There can be many things, but I am focusing on three main things, which are something that we cannot avoid. Like, substitutions, validations, these are something which are optional. We will do it only if we require it. But there are other restrictions or controls which we often forget, but is something that we always use. We cannot skip those. One is the GL account posting field status group. The second one is a document type parameters, and the third one is a posting key field status group. So first let us go to FS00. So I'm having a GL account. Let us say this is the GL account, and this GL account has a field status group assigned to it, and this field status group controls what fields are allowed for this one. For example, whether we can assign a cost center or not, whether we can assign a profit center or not, whether a value date is important or not, whether assignment is needed at a line item level, or whether a reference or at something else. So all those kind of mandatory, optional, or suppressed are the field status controls that we can have in place, which will restrict the user also to not post something or not give a value or a cost object which is not allowed by the business. So business will take a decision on this, like what kind of a GL accounts are allowed with what kind of a values to be posted on. So that is one control that we have. And the second control is at a document level. So if I go to this SPRO under financial accounting global settings, document, and define document types. So every document type here has certain parameters associated with it. Like what type of accounts are allowed on this one. So if you see here for this document type SA, these type of accounts are allowed. It can be an asset account or a customer, supplier, material, GL account. Anything is allowed. So for example, if you see something which is relevant for a vendor invoice, if I go to RV or a customer invoice, here it is allowed only for these kind of a GLs or accounts, but a material account is not allowed. So at a document type level, we can restrict the users from what kind of an accounts can be used for posting onto that document type. This is the second way of having restrictions. And the third one is to have posting keys. So every posting key, for example, I'll take it as 40, which is a typical debit for a GL account. We can say what should be the account type for which this posting key can be used and what is a debit or a credit for this one. And we also have a field status code. So here also we can say that whenever we are assigning a posting key to a particular line item, what values are mandatory or what values are optional or what values are suppressed, which are not allowed. So that kind of details are something that we can control from the three different aspects. One, it from a document type, second, from a GL account, and third, from a posting key. So these are very important when we configure our system because we do not want the users to post some random transaction which is not acceptable because it is difficult to monitor each and every transaction. These are some controls that we have in place. But one thing we need to understand is all these three are purely from a system point of view, but these do not consider the business transaction or the nature of the business transaction which the user is trying to post. For example, what if I say I cannot post a manual FI document wherein I am transferring balances from two expense accounts into two balance sheet accounts? What could be the reason? Maybe, I'm not allowed to purchase more than one expense line items at the same time by using a cash account, or it can be anything. I'm just giving a hypothetical example that there can be some business transactions which we do not want to allow the users to post on. One thing, I can remove the transaction authorization for FB50 altogether, but that also restricts them from posting other meaningful transactions. So I need to have a control in place which will help us to prevent some kind of a postings which are not acceptable by the business. And that is where document splitting comes into picture. We all know that document splitting is mostly used or majorly used only for splitting the characteristics at every level, making sure that the balance at every characteristic level is zero so that we can extract managerial reports at that level. But there are other aspects to it, and that is what we are going to discuss in this video in detail. So I'll take one example, and that example will help us to understand two aspects of it. One, how does document splitting control many things which we usually do not observe? And second thing, how can we configure document splitting in such a way that we can allow those kind of a transactions as well? So I'll go back to FB50. So here I am in the standard FB50 transaction code, and we have used this in the previous videos as well. We have posted one expense account to a balance sheet account, and we saw how the profit center has populated from expense account to the balance sheet account in the general ledger view of the document. But now we'll try something a bit different. So I'll try to post another document. So I'm just posting one expense account and have one expense account, and here I'm using profit center as common, and I have another expense account. So instead of using one expense account, I am using two expense accounts. Sorry, company code is different. Let me quickly change the company code. So first one I'm using common one, and for second one I will use EV1, and I'll have the same amount, and this is expense 2. And now I'm having to post this on a cash account. So this cash account, I'll have 200, and here obviously I'm not going to give any cost center. Okay, there is one. Let's enter this, and here I'll enter this due date. So everything looks fine. Now the document is in green status. Now I'll try to post this, and let us see. Or before I post, maybe I'll also see the simulation of general ledger. So here if you see, there is something very strange. First thing, we are having an expense account. On both the expense line items, we are having a different profit center. What is expected here? The balance sheet line item, which is having two different P&L line items assigned to it. The split of this balance sheet line item should be in the same way of how this expense line items have been split. That means we expect this 200 rupees on this cash account to be split into two different line items of 100 each, and each one will have a profit center, same as what we are having from this expense line item. One should have common and one should have EV. This is our expectation aspect. But here if you see, the split is completely different. System is bringing in this zero balance splitting, which means it is not able to identify what is the profit center or what is the baseline item from which it should derive the characteristics to split this balance sheet line item. So in that case, what does the system do? It brings in this zero balance splitting, and it has manually assigned this four line items, and for those out of those, for two we are having this profit centers derived from here. So overall, this document looks very different. Though at a management level, that means at a characteristic level, the line items, the balance at every profit center is balancing to zero, but still this is not how we expect the document splitting to work. But let us put that aside. Let us take one more step. Now we'll even try to save this. So if you see this, the document is posted. So this is the basic entry view, and here if you go to the general ledger view, it is the same thing. So how we have simulated it, the same way here we're having it. Now I'll do one more thing. I'll go back to our document splitting configurations. So here what I am doing is define document splitting characteristics for general ledger accounting. So here what I'll do, I'll make this profit center as mandatory. So till now only the zero balancing was active, but the profit center is not mandatory. Now I'll try to post the same document after we save this. So we'll go back and I'll post the very same document. So let us see what happens now. Ignore my spelling mistakes. This is one cost center and this is another cost center. And we have a cash account, which is a balance sheet line item, and a debit of 200. Let us double click this, enter the due date, back. And now I'll simulate this. So if you see here, this simulation looks very much same as the previous case because the document is completely the same. Now let us go back and save this. Now at the time of saving, it says the balancing field profit center in the line item 003 is missing. What is the third line item here? It is this cash account. And it says that on this cash account, the balancing profit center field is missing. So how do we enter the profit center? Usually we do not enter it manually. We are deriving it from the cost center. And that too, we enter this cost center only on the P&L line items because it does not make sense to enter a cost center on a balance sheet line item. It is not a cost center for us, right? So what is this behavior? So this is also one of the features of document splitting, which we usually not see it from the front end. So what does the system do is, as per the document splitting rules, the system prevents users from posting any random posting. So whenever the solution architect is designing the system or implementing the S4 HANA FICO, especially in the document splitting side, they need to understand what type of a transactions are to be allowed. Whether is it possible to allow this kind of a transactions where there are two PNL line items and one cash account by using this FB50 transaction code. So we can prevent the users from posting any random postings by using document splitting. So how to make this work? Or why is in the first place we are having this error message here? So let us see this detailed error log. So here if you see, it says that the balancing field is missing, fine, and it does not give any much details. But let us try to understand from the configuration point of view. We are now jumping on from basic or default standard document splitting to extended document splitting. So we'll try to understand what is exactly happening in the background, and based on that we'll see what can we do from the configuration point of view if we really feel that this kind of a transaction is acceptable for the business and the business actually wants us to allow this kind of a transaction by using this transaction code FB50 and the document type SA, etc. So in order to get what kind of a document splitting rule is being used, I'll go back to simulate general ledger, and here we can go to expert mode, and here we'll see this is the splitting method. Obviously the business transaction is 0000, and this is the variant, this is the document type, and these are all similar. So we need to do something at this level to understand or to allow the system to post this transaction. So I'll keep this the same way. We'll go back. So instead of going to this one, I'll go to the extended document splitting. And here first let us try to understand define business transaction variants. What is 0000? This transaction is unspecified posting. That means for the business or from the configuration point of view, business is posting something which is not classified as any specific transaction. It is not a customer invoice, it is not a vendor, it is not expense related, it is not bank related. So this kind of a transaction is being treated as unspecified postings. So we can restrict what type of a transactions can be posted by using this. So this is the variant that we saw. And here if you see, we are having these kind of item categories. So before we understand a bit further, first let us try to understand how did the system pick this business transaction. So I'll go back. For that, we need to go to classify document types for document splitting. Here we have this document type SA. SA is what we are using in the transaction FB50, and here we are having this business transaction and this business transaction variant SI. So based on this assignment, the system picked up this 0000 business transaction, and under that it was using this transaction. And if I double click this, here if you see, there is no splitting rule. That means the system does not have any baseline items to perform document splitting if we are using this business transaction and this business transaction variant, which is for unspecified postings. This will work if there is only one P&L line item and one balance sheet line item, or rather if there is only one cost object on all the P&L line items, and on the balance sheet line item there is no confusion for the system on how to split it. All it needs to do is identify what is the only unique characteristic, which is profit center in our case, and the system will just pick that up and put it on the balance sheet line item where we did not assign any characteristic. So in those cases it will work. For example, we are having one expense line item with profit center as X and one balance sheet line item. When we save it, that profit center X is now coming onto this balance sheet line item. So till that it works fine. But if we put the system under some confusion on what should be like having more than one cost centers, which is ultimately leading to more than one profit centers, then the system cannot do a document splitting in this case. So how can we overcome that? We can overcome that by creating some new or a custom business transaction variant where we can say what is the base line item for which we can split it. So before we discuss that, I'll also show you something. So here we have defined document splitting rules. So under this document splitting rules, let us see, this is the method that we are using. This is the unspecified posting, right? So if I double select this and go to item categories to be edited, here if you see, what is this item category? It is company code clearing. So what is this company code clearing? It's an item category, and we know that we are assigning GL accounts to company code clearing. So if the system identifies any GL accounts which are assigned to this item category, only then the system will be able to identify or perform document splitting even if there is more than one cost object assigned to those P&L line items. But in our case, what are the GL accounts that we have assigned? We have assigned expense 1 and expense 2. And where are these? Or to which item categories did we assign this? We have assigned all these expense line items into 2000 or 20,000 item category, which is under expenses. So we cannot assign any GL account to either zero balance posting or company code clearing. These two are such kind of item categories which SAP will not allow us to post or to assign any GL accounts. So in short, this unspecified posting, you cannot ever perform document splitting if there is more than one cost object. The system will fail to understand from which line items should it take the cost centers or the profit centers and split the balance sheet line item. So what can we do now? What can we do is we'll go to define business transaction variants. Under this business transaction variant, all I have done is I have just copied this. I can do once again. So I'll keep it as Y001. I'll take it as standard ACS and save it. If I select this and go to item categories, it is having all these item categories, same as what we had in the standard 0001 business transaction variant. I did not change anything. What does this say? That means the GL accounts assigned to any of these item categories are allowed to be posted under this business transaction and business transaction variant combination. Now let us go back, save this. And now what I'll do is I'll go back to this define document splitting rule. And here we'll create a new entry. We'll copy this standard 0000 and 0001. I'll copy this. And here what I'll do is I will, or rather what I'll, yeah, maybe we can copy it. So all I'll do is I'll have this as Y0001. Okay. Save it. Copy all the entries. These are all different item categories that we have assigned. Perfect. All entries have been copied. Now select this and we'll go to item categories to be edited. And here if you see the same thing we saw, company code clearing is the only item category that is allowed as the baseline item to pick the characteristics in order to perform the document splitting. But in our case, we do not have any GL accounts which are assigned to this item category called as company code clearing. So what we'll do is we'll copy this, and here instead of this item category, I will have an item category which is cash account. So this cash account is the line item which we're having on which the document splitting needs to be performed. So I'll have this as the new item category, and now I'll copy all the entries. And we'll go to these base item categories. So what did we do now? What are we doing now is we are saying that whenever the system identifies an unspecified posting, but with this business transaction, where the item category of the line item on which document splitting is to be performed is belonging to this item category 04000, which is cash account, then in that case, pick up the cost centers or the profit centers or characteristics from any of these item categories and assign it to this item category in the same way as how it was assigned to any of these baseline items. So that is what we are seeing. Now I'll save this. Okay, it says it cannot be saved. Let us see. Okay, sorry, the error is whatever the document splitting line item is there, we are also mentioning that in this list of base item categories. So all I need to do is remove this from here and now it should work. Save it. And now let us go back and let us try to repost the same document. Now I cannot just post this one because the backend program will change whenever the document splitting characteristics or document splitting related configuration is changed. The system will change the program for this transaction in the backend. So we need to reopen this and I will post this again. Expense debit 100 and cost center common and second one for EV and this is also 100 debit and this is the second line item and third one is a cash account. Now if I use any other GL account than cash account, like if I use a different balance sheet account which is not falling under the same item category which we have assigned here, then again we'll face the error. This will work only for these item categories or the GL accounts which are assigned to this item category. Now I'll go back, credit 200, double click, I'll enter this due date, go back, and now let us see the simulation. It still did not work. What is the reason? Though we have created this item category as 04000 for this Y001 business transaction variant, we did not tell the system when to derive this business transaction variant. So what we need to do for that? We need to go back and assign this document type SA with this variant as Y001. Save it. And now I will reopen this and quickly repost the same document. And we have two cost centers. Okay. And now let us simulate this. So now you see the cash account is properly split into two line items based on the PNL accounts or the characteristics assigned to the PNL accounts. This is the actual expectation of the system to split this balance sheet line item into. So this was did not work earlier because the configuration was not allowing this kind of a transaction, this kind of an unspecified transaction. So if I post this, it should work perfectly now. So I'll display this, go back to the general ledger view, and this is very much the transaction that we are expecting. Maybe I'll change the layout. I'll see if we can see a profit center. So this is the profit center that has been taken from the P&L line items and assigned onto the cash GL account or the balance sheet line item. So this is how document splitting can also be used to restrict any wrong documents posted by the business. So to summarize the video, we can understand that document splitting's primary motive though is to ensure that the characteristics sum up at zero so that we can extract balance sheet statements at every characteristic level for the management. Document splitting can also be cleverly used to manipulate the users from preventing them to post wrong transactions or transactions which are not accepted by the business. So, as a functional consultant, it is very important for us to have this kind of an understanding on the system and also to work together with the client to know what are the nature of transactions which are acceptable, which are not acceptable, and configure the document splitting in such a way that we can have the system allow only those nature of transactions which are acceptable by the business. So I hope you have found this video useful. If you found this video useful, please do like it, share it, and subscribe to the channel if you haven't done it yet. And you also know that you can join the channel and contribute for our work, for which in return you will also get discount coupons and lot of member exclusive playlists like Copa playlist, intercompany iDoc playlist, etc. And if you want to do a one-time contribution, you can click on the thanks button below the video and do a one-time contribution so that we can keep creating many such videos for you. Thank you. See you in the next video. Until then, take care.